Over $6 trillion vanished in a single hour. If you purchased at peak, my condolences. Silver plummeted from $121 down to $108. Gold collapsed from $5,600 to $5,100, and the vast majority remain clueless why. At this very moment, somewhere globally, someone sits watching their portfolio hemorrhage. Forced liquidations sparking more liquidations, a waterfall of red, stop-loss orders triggered, margin positions eliminated. And traditional financial media will claim it's merely volatility, standard market action, nothing concerning. They're dishonest. What transpired today isn't random, it isn't inexplicable. And if you fail to grasp why this collapse occurred, you'll be devastated by the following one. But here's reality. I've witnessed this precise sequence previously, not months back, weeks ago, December 2025. The final 2 days of the year, identical crash, identical hysteria, identical forced selling. And know what followed? January skyrocketed. Gold climbed 30%, silver surged 65%. The most substantial monthly advance in decades. So, is today's collapse the conclusion? Or the commencement of something far more significant? By this video's end, you'll understand precisely what triggered this crash. You'll grasp the concealed mechanism influencing gold and silver that most investors entirely overlook. And I'll demonstrate the historical sequence that could reveal exactly what unfolds next. But here's what most will overlook. I'm going to disclose something that could transform how you approach these markets permanently. A particular forecast with a particular time frame. Documented publicly. If you navigate away before that, you'll forfeit the single element that could convert this crash into your greatest opportunity. Remain with me. This matters. Welcome to the hidden economy. If you're unfamiliar here, I eliminate clutter and reveal what's genuinely occurring in markets while others remain distracted. Subscribe immediately because what I'm preparing to demonstrate could rescue your portfolio. Now let me dissect exactly what transpired. Today is January 29th, 2026. At roughly 10:30 a.m. Eastern, gold was exchanging at $5,600 per ounce. Silver was at $121. 60 minutes afterward, gold had plummeted to $5,100. Silver disintegrated to $108. $500 eliminated from gold. $13 eliminated from silver in 1 hour. Let me contextualize that. If you possessed $100,000 in silver at peak, you currently have $89,000. $11,000 evaporated. In the duration it requires watching a Netflix program, if you were utilizing leverage, employing margin, purchased call options maturing this week, forced liquidations sparking additional liquidations, that isn't merely an expression. That's precisely what occurred. When pricing declines rapidly, leverage participants receive margin notifications. They must sell. Their selling drives pricing lower. That activates additional margin notifications, more forced selling, more liquidations. It transforms into a waterfall, a cascade of red. And individuals who purchased at peak, ones who observed gold at $5,600 and silver at $121 and believed it's ascending higher. My condolences. Now here's what nobody's communicating. This collapse didn't materialize from nowhere. There were cautionary indicators, unmistakable signals, something was preparing to fracture. And let me be transparent about something. This crash wasn't accidental. Crashes like this never are. Somewhere someone understood this was approaching. The major participants, institutional investors, ones with information access you and I will never possess. They observed Fed communications before you. They observed China statistics before public release. They established themselves before the crash transpired. And when it transpired, they were prepared. They were positioned correctly. They were acquiring your panic-driven sales. This is game mechanics. It's perpetually functioned this way. The inquiry is whether you desire continuing being the casualty or commence understanding how the game functions. But before I demonstrate what triggered this, I require you to grasp something fundamental. Gold and silver didn't crash because something's flawed with gold and silver. They crashed due to something else entirely, and that something possesses a designation, the DXY. If you're unfamiliar what DXY represents, pay attention because this might constitute the most significant thing you discover today. And I guarantee 90% of individual investors have never encountered it. DXY represents the dollar index. It quantifies US dollar potency against a collection of other significant currencies: euro, yen, pound, Swiss franc, Canadian dollar, Swedish krona. When DXY ascends, it signifies the dollar strengthening compared to these currencies. When DXY descends, it signifies the dollar weakening. Now here's the fundamental component that'll transform how you perceive gold and silver permanently. Gold and silver fluctuate opposite to the dollar. They're inversely related. This isn't occasional, this isn't sporadic, this is virtually constant. Let me clarify this straightforwardly because it's critically important. Gold and silver are valued in dollars. When the dollar strengthens, it requires fewer dollars acquiring the identical quantity of gold. So the dollar price descends. When the dollar weakens, it requires additional dollars acquiring the identical quantity of gold. So the dollar price ascends. Envision it like a playground seesaw. Dollar occupies one side. Gold and silver occupy the opposite side. When the dollar side ascends, gold and silver side descends. When the dollar side descends, gold and silver side ascends. They can't simultaneously be elevated. They can't simultaneously be depressed. The seesaw doesn't operate that way. This is why experienced traders don't exclusively monitor gold and silver charts. They monitor the dollar. They monitor DXY. Because DXY communicates what gold and silver are preparing to execute before they execute it. Today, DXY surged aggressively. The dollar strengthened against competing currencies. The dollar side of seesaw ascended, and gold and silver, they suffered devastation. The opposite side of seesaw descended. This isn't intricate. This isn't some conspiracy. This isn't market manipulation. This is fundamental market mechanics that most individual investors entirely disregard. They monitor gold. They monitor silver. They fixate on charts throughout the day, but they never monitor the dollar. And then they express surprise when this transpires. They characterize it manipulation. They characterize it inequitable. They fail to comprehend they were monitoring the incorrect thing. And if you absorb nothing else from this video, absorb this. Monitor DXY. When the dollar spikes, prepare for suffering in metals. When the dollar plummets, prepare for profits. And here's the alarming component. Most individual investors possess no awareness this relationship exists. They acquire gold and silver without ever examining the dollar, and then they question why they keep getting stopped out, why they keep acquiring at the incorrect moment, why the market appears manipulated against them. It isn't manipulated. They're merely monitoring the incorrect thing. The experienced professionals, institutional investors, hedge funds, they monitor DXY like predators. They observe the dollar spiking, and they abandon metals before individuals even comprehend what struck them. By the moment you observe the red candle on your gold chart, they've already executed their sale. You constitute exit liquidity. Today, you transformed into exit liquidity for someone else, unless you comprehend this. Now let me communicate why the dollar surged today, because comprehending the why assists forecasting the subsequent movement. There are 3 reasons, and each one matters. Overlook any, and you won't comprehend the complete picture. Reason number 1, the Federal Reserve. Fed has been transmitting hawkish communications. For those unfamiliar, hawkish signifies they're inclining toward maintaining interest rates elevated or even increasing them. Dovish signifies they desire reducing rates. Currently, Fed is hawkish, extremely hawkish. Elevated interest rates render the dollar more appealing to international investors. Why? Because when rates are elevated, you accumulate more by possessing dollars. You acquire superior yields on treasury bonds. You acquire superior returns on dollar assets. So what do international investors execute? They acquire dollars. They convert their euros, yen, pounds into dollars, acquiring those elevated yields. Additional demand for dollars signifies dollar pricing ascends. DXY increases. And when DXY increases, you already comprehend gold and silver descend. Fed hasn't reduced rates as extensively as people anticipated this year. Everyone believed they'd reduce aggressively. They didn't. They're concerned about inflation resurfacing. They're communicating aggressively. They're stating rates might remain elevated for extended duration. And the market's attentive. The market perpetually attends to Fed. This is reason 1. Fed is hawkish. Dollar is potent. Metals are vulnerable. Reason 2, China. This one's particularly detrimental for silver. Pay attention if you possess silver. China's industrial activity is decelerating. Recent data demonstrates manufacturing contracting, factory production declining, economic momentum dissipating. Now, why does this matter for silver particularly? Remember what I've communicated previously. Silver isn't exclusively a precious metal. It's an industrial metal. Exceeding 50% of silver demand originates from industrial applications. Solar panels, every single one requires silver. Electronics, your phone contains silver, your laptop contains silver. Electric vehicles, every EV utilizes additional silver than conventional cars. Semiconductors, AI chips, data centers, all require silver. And where's the majority of this manufacturing occurring? China. When China decelerates, industrial demand apprehensions spike. Traders commence thinking perhaps silver demand will decline, perhaps fewer solar panels manufactured, perhaps fewer electronics, perhaps reduced silver required. Apprehension strikes. Selling commences. and silver being more unstable than gold, being more connected to industrial demand, crashes more severely than gold. This is why silver declined 11% while gold declined 9%. The China information struck silver more severely because silver's an industrial metal. This is reason 2. China's decelerating, industrial demand apprehensions increasing, silver's suffering impact, and I wish I could communicate that's the worst, but it intensifies. Reason 3, U.S. government shutdown, January 31st, 2 days from now. U.S. government's progressing towards shutdown if Congress doesn't approve funding. Now, shutdowns have transpired previously. They're typically temporary, they typically resolve, but markets dislike uncertainty. Markets dislike political disorder. When there's uncertainty, traders diminish risk. They secure profits. They relocate to sidelines. They sell initially and inquire subsequently. After the substantial rally we experienced this month, there was considerable profit positioned. Gold elevated 30%, silver elevated 65%. People were positioned on substantial gains. Considerable numbers were seeking an excuse to secure profits, seeking rationale, selling some position, securing some gains. The shutdown apprehensions provided that excuse. It wasn't the exclusive reason, but it was the catalyst. The excuse permitting people rationalizing selling. This is reason 3. Political uncertainty, profit securing, risk diminishment. 3 reasons converging simultaneously. Fed hawkish, China decelerating, shutdown approaching. Each independently might have triggered modest dip. All 3 simultaneously, all 3 striking at identical moment. Outcome? Exceeding $6 trillion evaporated in 60 minutes. Now, let me demonstrate something most people fail comprehending. The relationship between gold and silver. Considerable numbers believe gold and silver fluctuate together. Identical direction, identical intensity. That's dangerously incorrect. Yes, they fluctuate in identical direction, but not with identical intensity. Silver is gold on performance enhancers. When gold fluctuates 5%, silver fluctuates 10 to 12%. Identical direction, but with double intensity. Gold ascends 10%, silver ascends 20%, gold crashes 8%. Silver crashes 15 to 20. Examine what transpired today. Gold declined approximately 9% from 5,600 to 5,100. Silver declined almost 11% from 121 to 108. This isn't coincidence. This is the silver amplification effect. Gold initiates, silver follows, but silver follows with amplified intensity. This is why silver generated 65% gains this month, while gold generated 30%. And this is why silver crashed more severely today. If you're exchanging silver, you require comprehending this. Silver will enrich you more rapidly, but it'll also devastate you more rapidly. The leverage operates both directions. Now let me demonstrate something captivating. Examine Monday. Just several days previously, we experienced another crash. But that crash was different. On Monday, silver crashed 14%, but gold only declined 2%. Why? Because Monday's crash was silver particular. It was propelled by industrial demand apprehensions. China information, silver particular selling. Today's crash is different. Today, both gold and silver crashed simultaneously. Gold down 9%, silver down 11%. When both crash simultaneously like this, it communicates the cause is different. It isn't silver particular, it's a macro cause. And today's macro caused the dollar. DXY surged. Both metals plummeted. This is important comprehending because it communicates what to monitor. If you desire forecasting the subsequent crash, monitor the dollar. Not exclusively gold, not exclusively silver, the dollar. When DXY spikes, prepare for suffering. Now here's where it becomes intriguing, and this is the component you genuinely require paying attention to. I've witnessed this precise sequence previously. Not years previously, not months previously, weeks previously. December 2025, the final 2 days of year. December 30th and 31st, identical thing transpired. Almost identical configuration. Sharp crash from nowhere. Panic selling everywhere. Liquidations cascading throughout system. Red candles accumulating. Vulnerable hands getting devastated. The sentiment was absolutely catastrophic. Social media was saturated with pessimism. People were declaring the conclusion of bull market. They stated the rally was concluded. Gold and silver are finished. The peak is established. Apprehension was maximized. Despair was everywhere. And then January transpired. January 2026. This month, the month we're still experiencing. Gold elevated 30% in single month. Silver elevated 65% in single month. Record elevations fractured, not exclusively fractured, obliterated. The most substantial monthly rally in exceeding 40 years. All those people who panicked in December, who sold at bottom because they were apprehensive, who attended to pessimism and gloom, they observed the rocket initiate without them. They sold reduced. They forfeited everything. Now examine today, January 29th, 2 days before month's conclusion. Sharp crash, panic selling, liquidations cascading. Identical sequence, identical timing, identical apprehension. The inquiry is, will February replicate January? Will we observe another mega surge? Let me demonstrate why I believe we might. First, comprehend what hasn't transformed. This is fundamental. The crash today was about dollar, about Fed, about short-term apprehension, about vulnerable hands getting eliminated, but the fundamentals, comprehensive picture, components, genuinely mattering. None transformed, not one bit. While you were panicking, Tether was still acquiring 1 to 2 tons gold every single week. They didn't terminate because of 60-minute crash. They disregard your apprehension. They're accumulating. While you were monitoring red candles, BRICS nations were still accumulating. China, Russia, India, they didn't sell today. They acquired. They perpetually acquire dips. They've been executing this for years. While you were refreshing portfolio, de-dollarization trend was still accelerating. Countries are still relocating away from dollar. That didn't reverse in 60 minutes. While you were questioning everything, supply deficit in silver was still genuine. 5 consecutive years of deficit. Mines are still depleting. That didn't transform today. You comprehend what transformed today? Sentiment. That's it. Exclusively sentiment. Vulnerable hands panicked, powerful hands accumulated, and sentiment. Sentiment can reverse instantaneously. It reversed negative today. It can reverse positive tomorrow. Second, examine what transpires after sharp crashes. In bull market, crashes are acquisition opportunities. They eliminate vulnerable hands. They reset overbought circumstances. They generate apprehension, and then major participants intervene. They acquire apprehension. They accumulate at reduced prices. They position themselves while individual investors panic. Then rally recommences more powerfully than previously. This has transpired repeatedly throughout this bull market. The inquiry is, are we still experiencing bull market? Examine evidence. Gold is still elevated substantially on year. Even after today's crash, silver is still elevated massively. Even after today's plummet, central banks are still acquiring record purchases. Dollar's long-term trajectory is still downward. Today was spike, not reversal. Nothing suggests bull market's concluded. Everything suggests this is correction within larger upward trend. But I could be incorrect. And I comprehend what some are contemplating right now. Here he proceeds again. Another YouTube individual communicating to me maintain through suffering. Another person stating, acquire dip. I've encountered this previously. Look, I comprehend. I genuinely do. You're exhausted. You're apprehensive. You just observed portfolio decline double digits in hour. Last thing you desire encountering is some individual communicating remain composed. But here's reality. I'm not communicating what to execute. I'm demonstrating data. I'm demonstrating sequences. I'm demonstrating what's transpired previously in identical situations. What you execute with that information is your determination. I'm merely attempting ensuring you possess all facts before executing that determination. That's why I desire providing both scenarios, and then I'm providing particular forecast on record. Scenario 1. Bull continues. This crash is precisely like December. Elimination before subsequent leg elevated. February commences powerfully. New elevations by March. Silver fractures 150. Gold fractures 6,000. Probability, I'd state 60%. Scenario 2. Additional suffering approaching. Fed becomes more hawkish. Dollar maintains rising. China data deteriorates. We observe another crash. Gold tests 4,800. Silver tests 90. Probability, I'd state 30%. Scenario 3. Choppy zone. We progress sideways. No new elevations, no major crash, exclusively choppy, frustrating price action for weeks. Traders become bored. Individual investors surrender. Then movement arrives when nobody anticipates. Probability, I'd state 10%. Now here's my particular forecast, the one I communicated about at beginning. Silver will be back exceeding $120 by February 15th. Not by March, not by summer. By February 15th, 17 days from now. Here's why. This crash transported silver from 121 to 108, $13 downward. That's substantial in 60 minutes, but nothing compared to rally we just experienced. The sequence from December states we rebound. Fundamentals state we rebound. Oversold circumstances state we rebound. And February 15th, that's when shutdown drama will resolve one method or another. That's when apprehension subsides. That's when acquirers return. $120. February 15th. On record, screenshot this. Maintain me accountable. Which scenario do you believe unfolds? Submit your answer in comments. I examine every single one. Now let me provide some practical conclusions, because comprehending what transpired is useless if you fail comprehending what to execute about it. If you're maintaining physical gold and silver, my recommendation is straightforward. Execute nothing. Physical metal isn't an exchange. It isn't something you acquire and sell based on daily price fluctuations. Physical metal is insurance. It's long-term preservation. It's wealth conservation. You don't sell insurance policy because stock market experienced negative day. You don't liquidate savings account because there was market crash. Physical metal is identical. You don't possess loss until you sell. Until you sell, it's exclusively number on screen. It doesn't impact existence. It doesn't transform how many ounces you possess. If you acquired physical silver at $100 per ounce, you still possess that silver. It's still in possession. The crash didn't extract it. Disregard daily disturbance. Return in 6 months. Return in year. Fundamentals haven't transformed. Long-term thesis hasn't transformed. Exclusively short-term price transformed. If you're exchanging with leverage, today was your awakening notification. Leverage in unstable markets is termination sentence, not might be. Is forced liquidations sparking additional liquidations? That expression should disturb you because that's precisely what transpires when leverage participants get captured on incorrect side. You believe you're intelligent. You believe you can manage volatility. You believe stop loss will safeguard you, and then price gaps downward. Stop loss gets bypassed. You get liquidated at price significantly worse than anticipated. Account is eliminated. This transpires every single time there's sharp crash. Leverage traders get eliminated every single time. If you're utilizing leverage on gold or silver, diminish it dramatically or eliminate entirely. Gains aren't worth risk of total elimination. If you're waiting sidelines with cash, this might be your moment. Optimal time acquiring is when there's devastation in streets, when apprehension's everywhere, when people panic, when red candles accumulate. That's when intelligent money accumulates. That's when wealth transfer transpires. From panicked to patient, from apprehensive to prepared, but exclusively acquire what you can afford maintaining through additional volatility. Because I can't guarantee this is bottom. There might be additional suffering. There might be another leg downward. Acquire in increments. Don't proceed all in simultaneously. Acquire some currently. If it declines additional, acquire additional. Average into position. And exclusively utilize money you can afford securing for months or years, not money you require next week. If you acquired at very peak, if you acquired silver at 121 or gold at 5,600, I'm not being dishonest, it suffers. Observing portfolio decline 11% in hour suffers. I comprehend. But you possess two determinations right now. Determination 1, panic sell at bottom and secure loss. Render loss permanent. Transfer wealth to whoever's acquiring from you right now. Determination 2, maintain through volatility and wait for recovery. Accept you acquired at unfavorable time, but recognize unfavorable timing isn't identical as unfavorable investment. If fundamentals are still favorable, if long-term thesis is still intact, then your exclusive mistake was timing, and timing mistakes get corrected across time. History favors patient, but you must survive drawdown emotionally. You must observe red without panicking. You must maintain when everyone else sells. Can you execute that? Exclusively, you comprehend answer. Now let me address something important. Some are apprehensive right now. You're monitoring portfolio and experiencing nausea. You're questioning if you executed mistake. Let me provide perspective. In 2020, gold crashed 30% in March. People panicked, they sold, they stated gold's terminated. By August, gold struck all-time elevations. In 2008, silver crashed 50%. People stated silver would never recover. 3 years afterward, silver struck $50. Every single bull market possesses corrections. Every single one. The inquiry isn't whether corrections transpire. They perpetually transpire. The inquiry is, do you possess conviction maintaining through them? That conviction originates from comprehension. If you comprehend why gold and silver are rising long-term, you can endure short-term suffering. If you fail comprehending, every crash will eliminate you. You'll acquire elevated and sell reduced repeatedly. This is why I generate these videos, not communicating what to acquire, but assisting you comprehend what's transpiring so you can execute your own informed determinations. Now let me communicate what I'm monitoring. Number 1, DXY. If dollar maintains surging, additional suffering for metals. If dollar reverses, metals will rebound aggressively. Number 2, February 1st, day after shutdown deadline. What transpires in initial several days of February will communicate substantially. Number 3, China data. Any indications of stimulus or recovery will be bullish for silver. Additional negative data will be bearish. Number 4, Fed speakers. What they communicate this week matters. Hawkish communication signifies dollar potency. Dovish communication signifies metals rally. Monitor these 4 elements. They'll communicate what arrives next. Now, there are 3 categories of people monitoring this video right now. First category is panicking. They're refreshing portfolio every 5 minutes. They're contemplating selling everything. They're permitting apprehension, propelling determinations. Second category is immobilized. They don't comprehend what to execute, so they execute nothing. They exclusively monitor and anticipate it improves. Third category is absorbing. They're documenting notes. They're comprehending why this transpired. They're preparing for what arrives next. They comprehend crashes generate opportunities for those prepared. Which category are you? Let me conclude with this. Markets are configured transferring wealth from impatient to patient, from emotional to rational, from those reacting to those preparing. Today, $6 trillion transformed hands in 60 minutes. Some people forfeited that money, others acquired it. The inquiry is, which side of that transfer are you positioned? If you panic sold today, you transferred wealth to someone else, someone anticipating this, someone who comprehended the game. If you're still maintaining, you still possess chance. Game isn't concluded, and if you're positioned in cash, monitoring from sidelines, anticipating your moment, pay attention because moments like this fail arriving frequently. December crashed, January surged, January's crashing, February's approaching. The sequence is right there. Will it replicate? Submit your thoughts in comments about this crash. I'll generate follow-up video on February 1st, and we'll observe who was correct. Now, execute me a favor. If this video assisted you comprehend what transpired today, strike like button. It assists algorithm demonstrate this to additional people requiring observing it. If you're not subscribed yet, correct that right now. I don't execute hype. I don't execute false optimism. I demonstrate what's genuinely transpiring so you can execute superior determinations and distribute this with someone panicking right now, someone who acquired at peak and fails comprehending why this transpired. Transmit them this video. It might rescue them from executing substantial mistake. Remember what I stated at beginning, $6 trillion eliminated in 60 minutes. If you acquired at peak, my condolences, but condolences fail generating money back. Comprehension does, preparation does, patience does, the crash transpired. You can't transform that. No quantity of desiring will restore those prices. What you can transform is what you execute next. What you can control is your response. Will you panic and render it worse? Will you freeze and execute nothing? Or will you absorb and prepare? Market disregards your emotions. Market disregards your apprehensive. Market disregards you acquired at peak. Market exclusively rewards those comprehending it, those preparing for moments like this, those possessing plan before crash transpires. If you didn't possess plan proceeding into today, now's the moment generating one. What will you execute if we crash another 10%? What will you execute if we rally 20%? What's your strategy? Because there'll be another crash and another rally and another crash after that. This is how markets operate. This is how it's perpetually operated. This is how it'll perpetually operate. The inquiry isn't whether volatility will transpire. The inquiry is whether you'll be prepared for it. I've been studying these markets for years. I've witnessed crashes. I've witnessed rallies. I've witnessed people generate fortunes. And I've witnessed people forfeit everything. The difference is never intelligence. Intelligent people obliterate accounts perpetually. The difference is preparation, emotional control, possessing plan, adhering to plan. Today tested everyone. Today separated prepared from unprepared. Today demonstrated who you genuinely are as investor. Did you appreciate what you observed? The hidden economy? Because genuine narrative is never on surface. Also, join my channel. I generate silver update videos and will post updates soon over there. I'll observe you in subsequent video. We'll discover together who was correct. Until then, remain composed, remain prepared, and remember, $6 trillion transformed hands today. Ensure next time you're positioned on correct side of that transfer.